August 24th, Wednesday, market analysis, Stan Ehrlich. Hey, good morning everybody, California time. About 9:15, 9:19 a.m. We've been open obviously for a few hours. We have a rally in progress, but the rally started after we made lows this morning a little bit below yesterday. And yesterday's low was only a little bit below the previous day after dropping two big down days in a row on a Friday and a Monday. So Tuesday, not much more. That's yesterday. Not much more downside progress. A loss of downside momentum. Maybe. We also have relative strength. Not really very oversold. In the high 30s, which is not below 30, which is not the traditional level. So we're just plain not oversold, period. But we came sort of close. Not real close. Close enough to allow for a bounce in the market. And that's yesterday's information. This morning, we opened slightly lower across the board. I think it was about a quarter, 0.25 across the board, meaning S&P, Dow Jones, DIA, the QQQs, and the Russell 2000. I watch all four of those. And the Russell has something interesting this morning. So, for the moment, the rally has started. We've popped up pretty damn significantly, close to yesterday's high. Remember, we have a gap to close. If it can close it, I talked about it at some length yesterday, and I'll have to continue to watch this. It could be a breakaway gap to the downside. If that's true, breakaway gaps are the least likely kind of a gap to get closed. So I'm a little skeptical that we're going to have enough strength here to actually get up to the dotted line, dash line, which would close the gap. And that's from last Friday's low to this Monday's high. So we'll see if it can happen. If it does, I think that price level, the gap closure around 421, would be an excellent spot to go short or consider going short. Yeah, 421 and a quarter, it looks like, with the S&P, period. Now, that's the daily data. This is the way the 1 minute data looks so far this morning. We came down sharply on Monday morning. New lows, fiddled around, new lows again, closed. Down a lot. Yesterday we couldn't come up very much, only into a little resistance into previous day's range. Dropped down to slight new lows a couple different times. There was no downside follow through, and it closed a little lower. I think it was a point. This morning, right away, we opened a little lower, challenging the low of yesterday, Tuesday, and today, Wednesday, we made a slightly lower low. But the word slightly is important. No lower lows after that. We have been climbing all morning long so far, and on a little bit of a dip right now, 414.60-ish. All we have to do is get above yesterday's high, which was 415.40-ish, exactly 1 point higher than we are right now, and we will have a bullish engulfing candlestick at that time, and probably for the rest of the day, because we're well above the previous day's close at that point. So there is the chance that we're going to have a bullish engulfing not only in the S&P 500, but the same thing is happening in the DIA almost exactly, and the same thing is happening in the QQQs almost exactly. Now the Qs have been up a little closer to yesterday's highs than the DIA, which is still pretty close, and the Spider also. So all three of them may have bullish engulfings. Now, this is not an official Ehrlich reversal buy signal. If that was true, we would be very overbought sold, excuse me, very oversold, and the bar when we had an engulfing would turn green. And we don't have green possible because the oversold is lacking. The 2000 is a little different and has already had a bullish engulfing. This is normally a bullish sign, which is fine with me, but because yesterday's high was already closing a little bit of the gap over the weekend, now today's high, which is already lower than yesterday's low, so that therefore we have the bullish engulfing, has closed a little bit more of the gap. Since that gap is already half closed, or maybe more, it wouldn't be very hard to finish closing the gap on the 2000. But here's the question. If the 2000 closes the gap, is that going to cause everything to stop going up and everything start going down? I'm not so sure of that. The 2000 is not particularly that important an index compared to the Spider or the Qs or the DIA, which are the most important indexes, in my opinion. So, close the gap in the 2000, yes, maybe. Come closer to closing the gap, or maybe even a little bit of the gap on the other three, Spider, DIA, Qs, and then turn down. Hey, I can't rule out a complete gap closure on the Spider, the DIA, and the Qs. I just don't think it's going to happen, because I think that gap was a downside breakaway gap, and I think it's maybe not going to be closed at all or partially. We'll see, and it will not take long. It's going to happen maybe this week, probably no later than the end of next week, and I think a lot sooner than that. So just a few days. We'll see. Let's take a look at something else real quick. I outlined this in detail a week ago. The bearish engulfing, overbought, classic condition, new short sale signal, ER, bearish signal, period. Hogs came up to the trigger to get short, which we calculate in a special way for each symbol, depending upon price and ranges, etc., etc. We got short extremely close to the exact high of the day, and here it is, yay, new low for the break, 90.57.5 at the moment. So the trade is working great. So far, so good. I can't get to that. Euro is still below par at 99.5 and got down to almost 99 flat, I think, and has made a new low. So that cycle low worked for a few weeks for a decent rally, and then the market just simply continued the bear trend. I don't know what's because of the nuclear stuff that's going on in Ukraine or other factors. I'm a technical analyst. I don't really care. Those threats will show up in price action if they're deemed by the general trading public to be important instantly. So you'll see it happening before the news really, quote unquote, becomes completely public or vastly publicized. That's about it for today. I just wanted to concentrate on what's happening with these gaps. Oh, I want to show you something. We have a actual trade going on. ER. We bought this VIR stock this morning, fairly close to the low. It's doing very nicely. It's up $1 in profit, 96 cents at the moment, basically high and last. A real good one. I want to show you another one that, again this morning we bought Win, the casino people, almost at the low, right after the opening, doing very, very well, $1.60 on the ER signals. And there's one that is nothing short of spectacular. This one, CRSP, opened at around 69 or a little lower, 68.60, dropped right down in 5 minutes, almost exactly to our bid which was 67.33, the low that minute, and for the day so far, 67.10, missed by 23 cents, sorry about that. We actually got filled though at 67.19. Now that's 9 cents from the 10 low. Still, I apologize for the 9-cent miss. We're long on a sharp break, and it immediately popped back up again. This is beautiful. And it is almost at high and last, but that's not the important part. It's $4.22 profitable at the moment. Yay! And that's on a day trade so far. And it could be overnight. Remember, we have two versions of ER3, a scalp version and an overnight version. And these are my active charts for those strategies. And now, thank you very much. Be back tomorrow. Stand and look, have a profitable trading day.